Here on the Market Day Report, let's go straight to Oliver Sloup. He is with Blue Line Futures. Oliver, you've been watching these markets with us here today. A little bit stronger for the row crops, a little bit weak, quite a bit weaker for the wheat here today. How do you look at this in the spectrum of what we had with the weekly export sales? Earlier in the week, we had the world supply and demand estimate. Now we're, what are we, 10, 15, 20 days now away from a planting intentions report. What do you think of these markets?
Well, obviously, we got the USD report earlier in the week. There was a lot of anticipation, hoping that would either break us out or break us down in the range that we've been in for these markets, specifically corn. If you look back over the last 2 months, been basically in a 40-cent range. That report, unfortunately, didn't provide the fireworks that the bulls or the bears needed to give us that new directional move. The only thing the USDA really changed was the date on the report. So that kind of kept us relatively mute here through the back half of the week, and I wouldn't be surprised to see that continue. Ultimately, these front-month contracts are a little bit worrisome to me, more specifically on corn. We're starting to post lower highs. We haven't made lower lows yet, which is encouraging, but if we give way below 530 for that May contract, that could start to accelerate some of the selling from the funds. Now, the funds is very important. The fund position limits increase next week, and that could provide some fireworks. They've been defending their net long position really well for the last 3 months, and if they continue to do that, they can now add to that position. That could potentially squeeze the shorts, which, as you know, producers and commercials are the heavily short players in the market right now.
That's a good point. What have you been hearing about basis out in the country now that we're getting close to planting season? And you got to think that some of this new crop, both for corn and soybeans, probably already priced in.
Yeah, I've been hearing that, and I, as I had mentioned, I'm a little bit skeptical on these front-month contracts, but technically, and I think fundamentally, there's still room to work to the upside in these new crop contracts, December corn and November beans. I think that's where the potential is. If we do get any sort of weather premium in the market, the funds now, starting next week, will have the ability to lengthen their net long position. As I mentioned, that could put a little bit of a squeeze on commercials and producers who are near record net short right now. So it's going to be very interesting to see how that plays out, and obviously a lot of that pending on the end of the month report and weather going forward.